Hi, it's Charles Kelly. Welcome to Money Tips podcast. I wanted to give you a property update today because many of you are quite interested in property as an investment vehicle. But look, the market is still going through a sticky period. Um, the UK housing market, as reported here by Bloomberg, has been wilting under the weight of increased mortgage interest rates for the best part of 18 months. They've just gone up and up and up, haven't they? And we all know what that means to our mortgages. And because now the average person can't borrow as much as they could when banks were giving out mortgages at 1.5%. Now they're giving out mortgages at 5, 4.5, and 5%. Of course, they're going to restrict how much people can borrow, and that's one of the reasons why you see here that rents have soared. That was another part, but rents have started to soar because a lot of people can't get on that mortgage, that mortgage ladder, that property ladder, so they're renting in the meantime. But rents have gone up a lot, and there's a shortage of rental properties. When I've been trying to rent out a property, I've had like dozens and dozens of inquiries flooding in for people, and the first person who sees it, they want it. So it's quite a competitive market. But October tends to be a little bit of a quiet period. We've definitely seen things slower, but not much. You might say, well, it's gone down by this or that by a small amount, but asking prices, yeah, they're down, but that doesn't mean a lot. Asking price, what is the real price they get? So you don't know what the real price is until you've sold the property, and those figures tend to take up to 6 months to come through, to filter through the land registry system, who are taking weeks and weeks and weeks, sometimes months, to register the sale. So by the time it comes out in the news and you see the official figures issued by the government, or the ONS, the Office for National Statistics, that data is out of date. So you might see data now from the official land registry data that doesn't look so bad. Oh, prices have hardly changed. But wait for another, wait until after the winter and see what happens then to the actual deal. So we tend to get more of our news from lenders like Nationwide and Halifax because they are more current. So this chart here shows that the annual rate of change might not be matching precisely, but it's in the direction of travel is very clear, and it's definitely downwards. You can see here from 22 to 23. And the Nationwide is one of the biggest lenders, so is the Halifax. So they deal with a lot of mortgages. Obviously, they don't deal with the cash buyers, and we can look at cash buyers here. Cash buyers, it says here, keep the top end of London's property market robust. Like hundreds of properties that are over 5 million have been sold in the last few months. So the top end, there's people who've always got that millions of pounds, 5, 10, 20 million, to buy the real top end of the market properties in Mayfair and Belgravia and the West End and that sort of thing. But that's not the average person. London's always attracted the billionaires and people with money, but that's not the average market. But what we're going to look at is the sales figures. Number of property sales down nearly 20%. That's a huge amount, a fifth down on this time last year, while the proportion of homes for sale being sold has dropped from 80 to 60%. I found a lot of people through my estate agency business are just not selling. They say, well, we just can't sell. We're not prepared to take a hit. We're just going to take it off the market and wait and sit it out. And not everyone can do that, of course. But properties are also taking a lot longer to sell. The average home is now sitting on the market for 59 days, up from 37 days a year ago. And we all remember those crazy times when properties were just going crazy. So there's a lot going on. Rightmove, you see figures from Rightmove, they always talk the market up because they are working with the estate agents, they're working with the industry, so they want sales. So it's better to have more sales at a lower commission. And the figures from Rightmove, they tend to give you the headlines, but you've got to look beneath the headlines to see what's really going on. And one of those things is the number of sales down by nearly 20%. And what does that tell you? There's less people buying. What does that tell you? That if there's less buyers around and you want to sell the property, what are you going to have to do? You're going to have to reduce the price, right? And that's what's happening. If you've got the money, you can get quite a lot of good deals out there. And the other thing that's happening is that we had a little bit of a freeze on rate rises, so mortgage rates have come down a bit, right? So we've got here Mortgage news: Virgin stirs rates pot with a market leading 5-year fix at 4.71. Now that would have seemed like a huge amount a few years, a year or two ago, but now 4.71 doesn't seem so bad. There's other deals down here. Mortgage war is underway as lender offers a 4.99 fixed rate. So got to look behind the headlines as well, because some of these fixed rates might come with strings attached. I've talked about this before, that you can get low rates but huge fees added to it. So you've got to look really at the headline, beyond the headline figure, and see which are the real good deals out there. But of course, interest rates could go up again. We don't know what's going to happen. So mortgage rates have fallen in the last few weeks, and there's a lot of good deals out there, even for buy-to-let investors. So if you've been looking to remortgage, or you're thinking about it, maybe now's the time to look at it, because you can always lock in a rate before your current rate expires. So if you've got a current rate of 3% and you're worried, go and see a mortgage broker, get them to find a rate for you. Then you can lock that in, usually for like 90 days. And then if you don't want it, you don't have to take it. A better deal could come along. But if rates have jumped up again, if the Bank of England put up rates again, and your rate goes up, then at least you've got something secured, rather than leaving it to the last minute and then finding that you're in trouble. So that's just giving you a bit of background there. I think the market is still a little bit slow. Just seeing if I can find some better deals out here. No, that's not very good. I won't go on that site. Okay, so I've given you an idea. Rates have come down a bit, so that's good. As we saw here, when the Bank of England held rates started to drop, and you've even got some in the past few weeks, some 5-year fix and 10-year fixes below 5%. That's certainly a trend. Whereas a few months before that, we were looking at rates over 6 and 7%, especially for buy-to-let deals. So we've got some deals here, 5.96. Now they're down to like 5.39, 4.93. But a lot depends on whether you qualify for these rates as well, because you can see the best rates are things like 60% loan to value. So in other words, if you've got a house worth 100,000, you can only borrow 60,000 on it at these headline rates. So you've got like 5.96 there, 2-year fix, but it goes up to 6.13 if you're borrowing more, like 90%. So if you've got more equity and you've got a bigger deposit, you can get a better deal. As you can see, the 5-year fixed are cheaper here than the 2-year fixed, right? Maybe the lenders are expecting that rates could come down in the next couple of years, so they're pricing their 2-year fixed higher than a 5-year fixed. It's a bit of a strange one, because it used to be that you could get a 2-year deal much cheaper than a 5-year deal. If you wanted a longer term fix, you had to pay more for it. So there you go. You take your choice. If you're prepared to take a chance and fix for 5 years, you can get a better deal right now than you can on a 2-year deal. But then after 2 years, you've then got to find another deal again, right? So you've got to then go out and look for another deal, possibly pay another fee to a lender, possibly pay a mortgage broker and pay another survey and then pay more legal fees to switch rates. Whereas if you were able to, say, secure it for a longer period, then you'd have to worry about it, and it's more peace of mind. Tracker rates can go up or down. They track the base rate. Sometimes you can get a reasonable deal on tracker rates, but it depends on where you think rates are going to go. If you think rates are on the way down, then tracker rates are obviously good, because you're not fixing it at a higher rate. But it really depends on things. You just never know. You just never know what the market's going to do. Ray Bolger, Charcoal, said, caution that any further fixed rate cuts would likely to be modest for now. So he doesn't expect rates to go down that much. We know that the Bank of England have still said that they want to get inflation under control. Inflation's gone up in America again. Wages in the last few months have now starting to outstrip inflation, which means that the Bank of England might say we need another 0.25% rise. So you've got to take your own choice. I mean, a lot of this is affecting people who are remortgaging and coming off of previous deals. Even if people are not buying as much, a lot of people are remortgaging because most people are fixed for 2, 3, 5 years. So they're coming to the end of that and they're facing huge jumps. So my advice would be to get advice, go and see a good independent financial advisor or mortgage broker who can search the whole market, give you some free time and say, well, look, we can do this, we can do that, we can lock in that deal if you want to. And rather than trying to fish around on websites yourself, go and see a broker. If you need a good broker, contact me and I'll put you in touch with somebody. So there you go. Finally, I just wanted to talk about a blogger on TikTok that is advising Generation X to keep, they're calling it cash stashing, something like that, where they put their money in different coloured envelopes and keep the cash at home. These people are now being targeted by burglars. So I'd be very careful about that. It's all right having a bit of cash around, but your money is safer in the bank. I know you hear about banks going down, but you're protected by a government guarantee there. And I certainly wouldn't keep more than a small amount of cash in the house because you just know what's going to happen. There could be a burglary, a fire, or whatever. So just be careful of that and learn how to manage your money. Very important. I do run free webinars called 3 Steps to Successful Money Management and Building Towards Financial Freedom. So do check out my webinars, which are free. And I'll put a link up to that so you can join my mailing list as well. So I'll keep you in touch with things. And if you do like this sort of content, please like and share to get it out there. So thanks very much for listening, and I will see you again soon. Bye for now.